Hi everyone, I'm Ken from CryptoTradingKS. If you're new, a very warm welcome and welcome back CTKS family. Here you'll learn how to become fearless inside financial markets to assist you to become more of a financial and emotional blessing to yourself and those you love. A lot of people are asking the question, what's next? To answer this question, we must look to the main markets as well as the crypto market. In this episode, we're going to dive deeply into what the charts are telling us. You may be unsure of what are the interconnections and intercorrelations between all these charts, but they are definitely there. And when you know how they all connect together, everything changes. It's essentially important to know how these charts interrelate and what the different movements mean. This is primarily due to Rule 446, all markets are intercorrelated and interdependent. It may seem really complex now, but you've got to get used to this, because when you do and you understand how to time the market, everything becomes like magic. I'll go through the timing cheat sheet, which is available free of charge as a printable template on ctksmethod.org. I'll explain what's likely to happen next. And there's some very important data that you need to be aware of. If you like the content, please subscribe to the channel and don't forget to smash that like button. All the indicators that I use on the daily video come from the service inside ctksmethod.org. Let's run the numbers. Macro events are really important, and one is particularly important to the crypto market. BlackRock is expecting the Bitcoin ETF approval on Wednesday, in line with Bloomberg's January 10th deadline. Former SEC Chairman Jay Clayton just says approval is eventually inevitable. But that doesn't mean on the 10th. Are you prepared if it doesn't happen? But it has to happen. The ARK21 shares Bitcoin ETF, the final deadline is the 10th. Oh, okay, let's suppose that the SEC doesn't care about crypto, for example, just pretend. Maybe it doesn't care about ARK, maybe it just hides the paperwork somewhere. Or says to ARK, we'll give you an extension. Because why do I say that? Look at this. March. Ooh, they're all March, except for ARK. The entire crypto market pretty much thinks this is a done deal. I do not think so. The SEC, as I pointed out in many different episodes, is not crypto friendly. It's crypto hostile. Coinbase is trading on the markets, which meant it required SEC approval, but the SEC has still taken Coinbase to court. Even though Coinbase is the custodian of the BlackRock spot ETF. Yes, that BlackRock really rocks. Another very important thing is Rule 225. Bitcoin cannot escape the stock market's gravity. Financial systems are really complicated, and the US 2-year and the US 10-year are very important to understand. Literally, they represent the US 2-year the cost of short-term money, such as savings deposits. The US 10-year mortgage interest rates. What we can see right now, is the US 2-year yield has been following the normalized positive price path. When we see this behavior, we get retracements inside the main market. As the US 2-year and the US 10-year, as well as the DXY, have followed the normalized positive price path, what are we witnessing in the S&P 500? You got it. It's becoming weaker. Why do we care? We only want to look at crypto. No, we don't. That would be a huge mistake. When we look at the US 10-year, which is effectively the rate of money for mortgage rates, you can see that it's following the normalized price path. This is not good for the markets because it leaches money out of the system. It destroys basically consumer spending, which is a huge part of GDP. When we look at the DXY is on a rampage. We pointed out this was very likely in past videos. No wonder the S&P 500 is melting. What has this done to the crypto market? When we look at Ethereum, we can see Ethereum was at the start following the normalized positive price path. But as the yields started to bite, the 2-year, the 10-year, the DXY, and a lot of different underpinning things like junk bonds started to bite as well, we've seen that Ethereum is just consolidating at the moment with a bit of negative price momentum. This kind of behavior is exactly what we would anticipate with the yields going up. What about something like Bitcoin? Bitcoin has been highly suppressed because the yields and the DXY are coming up. Just because people don't understand how markets work doesn't stop them working the way they should work. The more timing knowledge you can get and the more structural knowledge you can get, the more you can profit from these crazy markets. And they are crazy, but they have laws. They move between structural price levels. All these price paths, which are level 2 standard certification, they're all about structural levels. Solana was doing incredibly well, but its structure is weakening significantly. Total crypto market cap should have been taking off, but it's gone to a consolidation case. This means that the main markets are weighing on the crypto market, even with the thought of a spot Bitcoin ETF. We have to pay a lot of attention to gold. Gold is a very geopolitical and risk-sensitive asset. If there are problems, gold feels it. And what are we noticing now? We've noticed that gold was doing pretty well, just like Bitcoin was doing, but the yields are starting to bite. The DXY is starting to bite. But you notice this behavior here. I'm going to explain why this is occurring. Even with all the positive news, Rule 225 still applies. That's why your timing cheat sheet is absolutely valuable. Bitcoin cannot escape the stock market's gravity. And global market indices cannot escape the stock market's, the US stock market's gravity either. We've seen Ethereum and Solana and a range of other alts come down because they can't escape Bitcoin's gravity, Rule 45. 4 years ago, I was tracking gold's price really closely and there were some unexpected developments occurring. In December, C19 people became aware of it. By March 2020, the markets had melted down. Bitcoin went with it, and boy did it come down hard. That caused massive stimulus to be injected into the financial system to save it. What are we seeing right now? We're seeing one of the biggest anticipated peaks coming through from the first wave. This is really discouraging news. A lot of people think that it's fantasy, but I know personally of families that have loved ones that have died from C19. Literally 8 hours ago, we're seeing a ramp up in Victoria, Australia. There are reports overseas, especially from China, that the morgue incinerators are running 24 hours a day. That is not normal. We need to be really aware that these kind of pandemic-related things have impacts on financial markets. The biggest impact that we're seeing right now, the government has stopped mandatory reporting. That's why it's looking at wastewater. This is occurring right across the planet. And it's been occurring for a while. People are starting to get awareness of it. You can't have a problem if there are no statistics or numbers to confirm that the problem exists. I saw gold back in 2019, 2020 relating to what was happening with the pandemic. It was spiking up at that time. If we start to see gold just starting to rally, especially when the yields go up, please pay attention to this sign. It's not a good sign. But I only want lollipops and rainbows. I want to be told that my investments are going up and I'm never going to make a loss. If that is the case, you're going to suffer from Rule 212. This is a really hard thing to come to terms with. The markets simply reward your synchronization with the markets. When you go from a probabilistic stance, when you have your rules, when you're looking across different segments of the market, the bond market, Forex, the stock market, crypto, commodities, just government data, everything that you can look at, the market will reward you. That means moving out of the fantasy zone, which is zone 1 and zone 2. How do you know if you're in zone 1 and zone 2? Emotions will control your buy and sell decisions. Inside zone 3 and zone 4, structural levels and the cheat sheet guide our buy and sell decisions. Going through the cheat sheet, we know that the macro factors are not operating at the moment. The stock market is closed. But crypto is 24/7. It never sleeps, and that's why we love it. One of the things with crypto, it is a new asset class, a once-in-a-generation opportunity to be part of something. And of course, all the biggest financial institutions in the world are really keen on getting in and cornering the market. One thing that we see, the crypto market is slightly more optimistic than it was yesterday. Why is that? Because it's got far fewer liquidations, and not the longs getting liquidated, but more so the shorts. Still a good amount of volume inside the market. We can also see that Bitcoin total and pretty much everything has been moving up. Bitcoin Cash remains in consolidation. Many people have reached out to me and told me they did really well buying the dip. If that was you, fantastic. Well done, my friend. One thing that we need to look at Bitcoin structural levels because it's got fairly nice support and it's coming up into a positive fresh air gap. If you're part of the CTKS method service, the ADA indicator was released and Litecoin was released as well. What you will find when you do the cheat sheet, you'll get an understanding of how the entire market, crypto especially, is moving. And you want to have an attitude of a large account, not a small account. Small account attitudes just create so many problems. You'll over-risk everything. You'll go for the 100-to-1 shots and you'll get wiped out time and time again. The key right at the moment is always knowledge. Build your knowledge up and you'll do really well. If you're also trading a specific crypto, say you were into Solana, but you do not look at Bitcoin total, you don't look at the 2-year, the 10-year, the DXY, you don't gain confirmation on where the DXY is going through the Forex pairs, you're not sure how commodities like gold and silver relate to the yields and the Forex pairs as well. This means that what you're doing in Solana is pretty much a guess. If you don't know the structural levels, you're in a tremendous amount of trouble. Let's turn first to the structural levels on Bitcoin's chart. This is the one that you really need to know about. When we think about what's next for the crypto market, we must pay attention to Bitcoin. As Bitcoin was coming down like this, the crypto market absolutely melted down. Literally 20% plus falls across the major alts and many more percentage falls for the lower alts. That means we must pay attention to Bitcoin. What do we need to pay attention to? Structural resistance and structural support levels. Right at the moment, we can see that this structural support playing out at that $44,000 mark, it's critical to get over. If we get over this, we're heading up to this $45,420 mark. If we get above that, we're going up further. A lot of people think that it's just a pre-drawn conclusion because Bitcoin spot ETFs are in the pipeline. They're all going to be approved and everything is fine. I spoke earlier about tracking gold into this real big, horrible, horrendous meltdown inside the markets in March of 2020. One thing that you can see when the US markets come down, when they weaken, every single stock market and Bitcoin and all of the crypto alts come down with it. This is a very nasty retracement inside the crypto market. What can we see right now? The Nasdaq is coming down, and this is causing the global markets to retrace. Crypto so far is being propped up with the promise of ETF approval, but if that doesn't happen, expect a really significant pullback. But the prospect for Bitcoin and crypto is incredibly powerful. Many people, I've said many times, I've asked the question, would you buy Bitcoin and crypto in this kind of price action? Everybody says, of course, Ken, I would. But the truth is, as soon as prices go negative, many people just leave the market and they do not return. That's exactly the time they should be in the market. The retail mindset just costs people everything inside financial markets. That's why, as a community, we're dedicated to getting rid of it. That's exactly why I share the cheat sheet, exactly why I show you how different charts are moving, why I share the structural levels. I really want you to succeed. Your structural levels are one of the most important things that you can ever look at because they mark up all of price history. Let's just pop on the indicator. Here we're looking at total crypto market cap. If total market cap can't get above 1.642 trillion, that means there's negative momentum inside the market. To substantiate this, we would expect yields to increase, the DXY pairs such as the DXY and the dollar-yen combo to increase. We would expect yield-sensitive and dollar-sensitive asset classes like gold and silver to decrease, the euro-dollar and the Aussie dollar to fall, junk bonds to decrease, all of this placing negative price momentum on the S&P 500, the Nasdaq, the Dow, and the Russell. When the global indices come down, they just can't help but drag everything down with it. Therefore, in determining what's next to get ready for whatever price action throws at you, you must get coordinated across the crypto market, the stock market, and the macro factors. If the crypto market is weakening, you can be pretty assured that the stock market will be weakening as well. There's so many things that we need to look at. At the start, it's pretty overwhelming, but it will get better and better and better until you can read it like I do. Just wanted to let you know that I think ADA and Bitcoin are very interesting to look at from a structural perspective. One of the things you want to bear in mind, the Tier 1, Tier 2, and Tier 3 charts, if you know the structural levels, you're already ahead of 95% of people inside financial markets. When things get really volatile, you must know where the structural support levels are. Please let me know in the comments, how are you preparing for this kind of price action? Things are looking a little uncertain inside the markets at the moment. How do you deploy 3 simultaneous strategies, one up, one neutral, and one down, to safeguard your portfolio? How do you seek to raise your synchronization factor? Always know that the degree to which you are synchronized in with the markets is the degree to which you are paid, the degree to which you profit. How are you controlling your emotions, getting out of zone 1 and zone 2 into the learning zone, zone 3, and the peaceful zone, zone 4? You know if you're inside zone 4 because if price goes against you, you're actually pretty happy because you want that and you're going long at spot, you're not going short. If you find that you're getting overwhelmed by anger when things don't go your way, please make sure that you do not blame. Blame is the foundation of all anger, and blame is the foundation of compounding losses. It's very unprofitable to get angry and to blame. How we do one thing is how we do all things. Instead of getting angry and blaming, we need to focus on insight. Literally, we turn into ourselves, into our own awareness and understanding, seeking to learn as much as we possibly can. Understanding that market tuition fees must be paid by everyone. Therefore, you're not making a mistake. There's no such thing. You're learning. You just learned a lesson through your loss, or a losson. That gives you empowerment, and it does not create compounding losses. It creates compounding profits. Our community focuses on positive excellence. One of the things, positive excellence is literally all about learning. It's the understanding that we never make mistakes. We're never in error. We've just picked up a lesson that we need to learn about. Instead of beating ourselves up or beating up other people, we need to just get the lesson. So many times when I was lecturing first and second year statistics, many of the students were getting so angry at themselves. Oh, I just don't understand. I can't get this right. And I said, you're learning. That's normal. Be kind to yourself. Just get your foundations correct. This kindness, especially to yourself, is incredibly important. I found that the angriest people are the ones that are the least kind to themselves. They do not have inner peace and they do not have outer peace. In financial markets, they do not have profitability. In life, they have bad relationships. They are always in conflict with everybody. They simply don't understand the insight cycle. They are trapped in the compounding loss cycle. These kinds of people treat life setbacks as permanent. They are never permanent. And if you're going through a life setback, a life pullback at the moment, our love and healing thoughts are with you. The sun will come out again. And all you're doing when you get a setback, you're finding a level of structural support inside your own life, and you're getting set up for the next life rally. Always remember that these pullbacks in life are just like pullbacks inside the market. They are bound to happen, but they make you a better person. Combining a winning psychology, which is a kind psychology to yourself and to others, means that you're being kind to yourself. If you are not kind to yourself, you're living a tortured life. Therefore, there are a couple of questions. What's next for you and what's next for the markets? At any stage, you can click your fingers and have a completely different life. You just have to decide never again. Never again do you need to be angry. Never again do you need to blame. Instead, you just focus on kindness, gratitude, and learning. And to our beloved global family, Kate and I just appreciate you so very much. We're so grateful that we share this time together. You're amazing people. If you can always solve your problems with positive excellence, you're going to do fantastically in life, knowing that you either win or learn and never blame. Anger is always a show of blaming. A lack of kindness is a show of non-profitability. A lack of emotional control means you will not be profitable in the markets. You need to change your thinking. How do we change our thinking? We simply get synchronized in with ourselves and the markets. We do the cheat sheet, we know the structural levels, and we adopt positive excellence. It's pretty straightforward and attainable by everyone. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.